So this is something that we will be looking out for. For the moment, let's focus on some stocks. Lumax Industries is in focus. The stock has been a big performer this year, so up about 150% this year. Or today, of course, a tad bit subdued, but the stock has been buzzing. So we have the management, a rarely heard voice. In fact, we don't get to speak to him very often. Deepak Jain, the MD of Lumax Industries, joins in. Mr. Jain, good afternoon, and thanks much for speaking with us. The stock has been a big performer this year. So we want to find out, in the lighting segment, you have, 60% market share, right, currently? In that sense, what's the kind of growth that you're envisaging now over the next 2 years, say, even with the existing customer base?
I think the growth in the lighting segment is not just going to be only volume driven, but it's actually going to be technology driven. Currently, the Lumax enjoys a very high market share. 1/3 of a revenue base is from Maruti Suzuki, which is also performing very, very well. If you look at just Lumax standpoint, we have just opened and inaugurated a new facility for Maruti Suzuki for the new Swift platform, and that's almost with a capacity of 300,000 vehicle sets, both headlamp and tail lamp. And we will be commissioning first in Gujarat's follow through for Maruti Suzuki. So I think that going forward will give us the volume growth. However, there's a huge shift from the conventional lighting to the LED lightings. And we see that in not just the four-wheeler, but also two-wheeler, in the also agro spaces across segments, including commercial vehicles. So I think that would also give us a robust growth in the years to come.
All right, Mr. Jain, so your current market share in the passenger vehicle segment, is it at around 50 to around 60%? Is that number a number we can work with?
That's correct. In the passenger car, we should be at that.
50-60%. All right. I want to take that other point in terms of the LED lighting. You know, that was only around 8-9%. Last year, I think it moved to around 20%. Are you looking at growing that particular segment? Where do you see that stabilizing?
I think there is a very fast adoption of the LED lighting coming through, and there are multiple reasons for that. It's not just aesthetics and lighting performance, but if you see the BS6, which is coming in 2020, all the vehicles, including two-wheelers, need to be more energy efficiently managed. And hence, there is a need where there is a clear-cut opportunity in lighting where we would go from conventional to LEDs. Also, as we are getting more closer towards the green, the e-mobility, also there's the trend where lighting will become more and more efficiently managed, and again LED becomes a trend. Currently, we are actually having about 25% of our revenue coming in from LED, 75% from conventional, but we expect that the LED segment growing faster, where by 2020 it probably be about 50-50, where 50% is LED and 50% lighting. And just to give you a yardstick, almost close to about 4 years back, we were just about 5%. So 5% or even less than 5% was LED. So it's been a huge shift towards LED from conventional.
All right, another quick question, Mr. Jain. I think you're sourcing some part of that from one of your partners, Stanley. You can correct me if I'm wrong. Is there any kind of effort to start producing this domestically itself that could reduce costs?
Good. Sure. I think Stanley is one of the only auto lighting players in the world which they also manufacture their own LEDs. Of course, Philips, Osrams, and the other global LED players are also our partners where we source LEDs from, but Stanley also, of course. As we see more adoption of LEDs, we will be making a phased-wise localization plan. Our intent is to give the right value to the customer, and obviously LED manufacturing needs economies of scale. So we will be, in the next 3 years, you will see that we will have a phase-wise electronic, including the LED SMT localization in India. The company is already working on that.
Okay, Mr. Jain, we have actually one of our viewers has sent us a query from Twitter. Auto writes to us, he wants to know how much of Honda's requirement are you currently supplying. He says he thinks it was 40-50% last year, so wants to know what's the current position. And I want to just add to it as well. I want to know what's the kind of increase in business you're focusing on, not just from Honda, but are there other, like say the top 5 clients, are there more that you're targeting?
Okay, so I'll take the Honda question, and I'm assuming this is the Honda two-wheelers you're
Yes,
talking about,
yes.
or it's talking about Honda cars?
Yes,
Two-wheelers, okay.
two-wheelers.
So for HMSI, HMSI is our number 3 customer. It actually contributes 11% of our revenue. We do have about 40% of their share of business. Now, HMSI is also, as I said before, two-wheelers are adopting the LED, and with LED adoption, our market share is supposed to increase about close to 5 to 7% in the next 2 to 3 years. If you see the Grazia, which has been very recently launched on Diwali, those have our LED lighting, and going forward, they also have a chain of product lines which would be also adopting LEDs. So I think that gives us a technology edge with the other local competitors, and hence the increase in market share.
All right, Mr. Jain, also wanted to ask you about the other venture you have, your associate company, SL Lumax. That's, I think, primarily to cater to Hyundai. Now, that's been growing. It's been doing quite well. I think in terms of profitability, it gives you roughly around 15 crores over there. What's the outlook there? Is demand looking good even over there?
So yes, as you know that Hyundai has had a strong growth, and also SL is a dedicated source, it's a global source for Hyundai. We actually have a minority 22% equity in there. However, going forward, SL Lumax would actually be not just catering to Hyundai, but also hopefully for the Kia project.
Okay.
So we definitely see both top line as well as bottom line growth to continue.
Okay.
Their prime focus remains the Hyundai Group company, and Lumax Industries will cater to all other customers within the country.
All right, Mr. Jain, we're running out of time, but very quickly, I wanted a couple of answers for all our viewers. First things first, focus on LED. That's the prices are higher over there. Can we see margin improvement going ahead? The operational margins is what I'm talking about. And Edelweiss note said that maybe we can look at around 200 basis points in terms of margin improvement. And you've been writing down your debt. Are you looking to be debt-free anytime soon? You could be net cash as well in the next couple of years.
So, well, we're going to be debt-free by March 2018. Currently, our long-term debt is just about 3.6 crores on the book.
Okay.
So, for a revenue size of close to about 1,200 to 1,500 crores, that's almost debt-free. In terms of all the investments, like the Gujarat investment, we did about 150 crores this year. That's all through internal accruals. Going forward, we, of course, would be positive cash, and we would like to retain that for future technology investments and also investments in R&D. In terms of just looking at the margins, if we actually go into the LED, you actually see a revenue of about 2x to 5x. Now, it all depends on the segment where it is, but of course, there is a much more healthy margin, and you're right, Edelweiss guidance is probably correct and accurate that when it converts to LED, we would have about 200 bips in terms of revenue improvement.
All right, thanks.
Margin improvement.
All right, Mr. Jain, thanks so much for stopping by and talking to us about Lumax Industries. It's been a big wealth creator. That's some positive guidance coming ahead. They're saying that, in fact, they could be debt-free in the coming months. Margin improvement is something that they're looking at, and also increase in terms of market share, both in the two-wheeler as well as the four-wheeler space. That stock, remember, has been a big outperformer. Today, it's mildly lower in trade.